the use case for Bitcoin, the argument for Bitcoin is more clear today than ever before. But in terms of it really was it's fund flows that determine the movement of an asset price, especially in any kind of multi-week, multi-month period. And so one thing I've been pointing out, for the past few months, if you look back historically at Bitcoin's price, you have the 4-year halving cycle, for example. Bitcoin generally done well after halving. But another way to look at it is that it's generally done well during rising PMI environments and has done poorly during falling PMI environments. And so PMI stands for Purchasing Managers Indice, and it's kind of a rate of change indicator for the economy. And you can look at it in multiple different countries. I'm referring to the US PMI as one of the largest economies. And generally, when you have that falling PMI environment, it's not necessarily that you have a recession, otherwise, but you can. It just means you have an economic softening. You have a slower period of growth that could become a recession under certain circumstances. So in the prior, say, 10 to 12 year expansion, we had about 3 cycles of rising PMI, falling PMI, rising PMI, falling PMI, till the end of that period, until we kind of were running into COVID. We didn't really get an actual recession. When you have those falling PMI environments, generally risk assets, highly volatile assets, including Bitcoin, have struggled. And so, many of us might not view Bitcoin as a risk-on asset fundamentally, but just because of its volatility profile, a lot of large pools of capital will put it into that risk asset bucket. And so when you have this sort of situation, you naturally have a lot of risk managers looking to de-risk their portfolio, which for them means lower volatility. And so they'll trim things like Bitcoin, or at least maybe not start new investments in Bitcoin, while they have this kind of risk-off environment. Anything can happen. Correlations can break down, right? But that generally in a falling PMI environment, it's just generally challenging for Bitcoin. It's like a headwind, right? So everything else can be going well, and that's just this ongoing headwind. So what we've been seeing is that if you look at on-chain indicators, the supply side looks great. The percentage of supply held by very strong illiquid hands. Over the past year, we've been in this choppy market. A lot of the coins have moved from short-term traders to longer-term traders, from accounts that have a higher propensity to sell to accounts with a very low propensity to sell, kind of the supply squeeze. But that's only one side of the equation. You need demand if you're going to get a big price increase. And just that demand has been somewhat lacking. Around the margins, there are people that say, oh, this is what Bitcoin is. And they buy it. But you don't really have these large pools of capital coming out and saying, we're going to put $1 billion in a Bitcoin now, we get it. I think that's something you might see in the next rising PMI environment. So I think what we're in now is we're setting up, the supply side's very tight, and we're kind of setting up for the next bull run. And, it's hard to say when it starts. Maybe we've already seen the bottom. I think there's a decent chance we've already seen the bottom. Just because we're chopping around doesn't mean that you can't chop around in a mild bull market until you get some sort of catalyst that gives you a renewed bull market. Or we could just chop around sideways, even go a little bit lower. It's hard to say for sure because, it's a very volatile asset, and it's kind of based on, a small number of new billionaires coming into the market or not. If you get a couple Michael Saylors, that just changes everything. All the models are broken, right? So, it's hard to actually give that kind of near-term price prediction. But I'm generally bullish long-term, while being kind of uncertain for a 6-month period because we're in this kind of choppy risk-off environment in terms of macro. I think right now, in the very current snapshot, it's too small still, despite the fact that it's grown considerably. I mean, there's $13 trillion in U.S. denominated foreign debt in the world. There's something like, over $7 trillion in official reserves denominated in treasuries, plus more in terms of bank accounts and other things like that. And so you're comparing that to an asset that is currently worth less than $1 trillion and is more volatile. And so at the current time, we can understand why they've been slow to look at it, because when it was only worth tens of billions and then hundreds of billions, it's still not a huge contender compared to the dollar. But if it continues to reach, say, multiple trillions, then it becomes an interesting competitor to the dollar, or more specifically, the treasury, right? The idea that you can hold something long term that is outside of the dollar-based system. Right now, I would say the biggest competitor to the dollar is still gold in terms of, say, official central bank holdings, but it's about rate of change, right? So we're seeing different countries kind of explore the use of Bitcoin as an alternative. In addition, unlike gold, Bitcoin also presents an alternative payment channel. So the ability to make, difficult to censor transactions globally. And so we've seen some central banks dabble in that. And I think over the long run, if the network effect of Bitcoin continues to be very robust, and if adoption continues to grow, and if the market capitalization reaches multiple trillions, and if volatility continues to inch down as it's more widely held, that does become an increasingly interesting alternative to the dollar. Like I said before, the current dollar system isn't even necessarily benefiting the U.S. anymore, right? So we've had to run these big trade deficits, and that hurts a lot of people. And there's analysts like Luke Groban, for example, that are pointing out some of the ways that actually China is kind of using the dollar system against the United States. So you can argue that back in the 70s when the system was established, it made a lot of sense because it essentially helped the U.S. win the Cold War against the Soviet Union. It helped us kind of gain influence over the Middle East. It helped our economy a lot. But in the 90s, when you had the fall of the Soviet Union, you had the opening up of China. We basically probably should have reshuffled the system, basically changed some of the incentives around, but we didn't. And so what happened was we continued running these massive structural trade deficits. We actually accelerated them in the 90s. And what China did was China then became a large surplus. And what China did was China would take all these dollar surpluses, and they used to buy treasuries, and they used to buy other, they used to help fund U.S. deficits. But then what they increasingly began doing is instead saying, okay, we don't want to hold treasuries anymore, right? They're sanctionable. Their yields are below inflation. So instead, what China began doing is using their dollar surpluses to buy up all sorts of foreign infrastructure and foreign assets around the world. Commodity deposits, infrastructure lending. They basically lent to a large portion of the developed world as part of their Belt and Road Initiative. And so they're kind of in some ways using the dollar system against the U.S. And so I think over time, if the U.S., if they resist it, it's very hard for them because if you get the reserve currency kind of changed without your consent, it can be very painful. But if they see it coming, if they see the fact that just due to technology, due to global economic trends, payment channels and reserve practices are kind of diversifying. If they get ahead of that trend, then they can use it for the benefit of reshoring and use that over time and have a more graceful exit from the prior system. So I think it depends how good policymakers are dealing with that. And I would say so far they're not really getting it. So I would say so far it's not looking great.